Hello, Ma'am Berlin. We are the Group 4 and we are called Mplp, which means... Mom, pasa lang please. Before we start our case study, we would like to introduce ourselves.
The case overview for the Fortner Corporation's bad debt reporting indicated that the corporation uses allowance method to estimate their uncollectible accounts, and the corporation used this method when they got a start of operation from December 31, 2025. And historically, with the use of the allowance method, the company provisioned that their monthly or interim bad debts for doubtful accounts amounted to 2% of credit sales, wherein their credit sales amounted to a total of 540 million. Furthermore, the said bad debts of the corporation that was written off got charged to the allowance account, to which in this case amounted to 5,400,000, while the recoveries of the bad debts that were previously written off amounted to 900,000 got credited to the allowance account. There was no year-end adjustments done to the allowance account because the company or the corporation only adjusted for actual write-offs and recoveries. The corporation's usual credit terms are net of 30 days. On January 1, 2025, the balance in allowance for doubtful accounts amounted to 7,800,000. And on November 2025, Fortner installed a computer system and an aging of accounts receivable was prepared for the first time as of December 31, 2025. This is the summary of aging. Basing off the data provided a while ago, the collectability of the account balances in the prior to January 1 to 2025 aging category, it seems that additional receivables totaling 3,600,000 were written off as of December 31, 2025. 80% of uncollectible estimate is to be applied to the remaining 5,400,000 under the category. Now, effectively, with the year ended December 31, 2025, Fortner has adopted a different method of estimating for allowance for doubtful accounts at the amount indicated by the year-end aging analysis of accounts receivable. In 2025, the Fortner Corporation had a credit sales of 540 million, bad debts written off 5,400,000, and recoveries of 900,000. And they also adopted an aging method for estimating allowance of as of December 31, 2025.
So the followings are the key issues or the problem statements of the problem. So first we have a change in estimation method. Fortner Corporation changed its method for estimating the allowance for doubtful accounts at year-end 2025. Instead of applying a flat 2% of credit sales throughout the year, they adopted an aging of receivables method as of December 31, 2025. This changes affects the accuracy and comparability of financial statements. It must be justified and disclosed properly under accounting standards. So the accounting standard is IAS 8, which is accounting changes and errors corrections. Second, we have allowance for doubtful accounts adjustment. So since we changed our estimation method, there is a need to recalculate the year-end allowance for doubtful accounts based on the aging analysis and adjust the allowance balance accordingly. This involves accounting for the beginning balance, the write-offs and recoveries, and new year-end estimate based on the aging schedule. Now we have the ethical, regulatory, or managerial concerns. So first we have the consistency and transparency. Ethical concern arises from changing estimation methods without proper justification or disclosure. Users of financial statements rely on consistency for meaningful comparison over time. Second, we have regulatory compliance. Compliance with GAAP or IFRS is necessary. Any accounting change must follow proper disclosure and requirements and have a clear rationale on why the change was made.
So now we need to find the change in the allowance for doubtful accounts due to the change in accounting estimate. So first we need to write the balance. So the balance here is just part of our given. We need to add the provisions for doubtful accounts. So to find that number, we multiply the total credit sales with the percent, which is 2%. So that's 10,800,000. We also need to add the recovery of accounts previously written off, and that's just given here as 900,000. So to sum it up, that's a total of 19,500,000. Now what we need to deduct is the bad debts written off. So that's given as 5,400,000. But note that there's an additional 3,600,000 that were written off. So we need to add that, a total of 9 million. And deduct those two, that's 10,500,000. So to find the increase or decrease due to the change in accounting estimate, we need to find the balance, the ending balance after the adjustment using the aging method. Now, note that in the prior to January 1, 2025 balance, part of that 9 million is the 3,600,000. So we need to deduct that, and that's just 5,400,000. So here we just need to solve this. Multiply the balance with the estimated uncollectible. Let's sum it all up. That's 15,816,000. And let's squeeze these two. And your adjustment is 5,316,000. So for our second task, prepare the journal entry for the year-end adjustment. It's just gonna be doubtful accounts, expense, allowance for doubtful accounts, it's just copy paste this amount. Let's write the description to record estimate. So that's it. This is our task.
So in this case, the accounting standards involved are PFRS 9, IAS 8, and the matching principle under the conceptual framework. PFRS 9 requires recognizing expected credit losses using forward-looking data supporting Fortner's shift to the aging method, and the IAS 8 applies because this is a change in accounting estimate, not policy, but due to a new system data. So there are actually financial impact of different choices or action. First is the using of percentage of sales method. Fortner used the percentage of sales method during the year, recording bad debt expense at 2% of credit sales. So the impact of this method is that it results in consistent expense recognition but may misstate receivables on the balance sheet. For the second is the switching to aging of receivables method. So at year-end, Fortner adopted the aging method, which is more accurate and complies better with PFRS 9. So the impact of this method is that it is more accurate and relevant balance sheet presentation. Then there is more timely recognition of losses. It affects net income through a higher bad debt expense, and it enhances transparency and reliability for stakeholders. As for the recommendation, after thoroughly analyzing the case, we recommend that Fortner Corporation record an additional 5,316,000 adjustment to the allowance for doubtful accounts as of December 31, 2025. This adjustment is very important to align the ending balance with the 15,816,000 estimate based on the aging of receivables. This recommendation is grounded in the matching principle under accrual accounting. So now that Fortner has implemented a system capable of tracking accounts receivable by age, it is more appropriate to use the aging method instead of the previous approach of simply applying 2% to the credit sales. From an ethical standpoint, this change demonstrates Fortner's responsibility to provide honest and transparent financial reports.
For the conclusion, the Fortner Corporation case illustrates the significance of using a more accurate and appropriate method in estimating bad debts. The shift from a simple 2% credit sales approach to an aging of receivables method at year-end 2025 marks a critical improvement in the company's financial reporting practices.
This change not only aligns with the requirements of PFRS 9 but also enhances the accuracy of the allowance for doubtful accounts by reflecting the actual credit risk across various receivable age brackets. Furthermore, the adoption of the aging method not only ensures a more accurate presentation of receivables at their net realizable value, but also supports a more informed decision making. It reflects a more refined understanding of credit risk, especially for older and more overdue receivables. For a reporting perspective, it enhances transparency and reinforces stakeholder confidence in the company's financial integrity.